Hi, this is Xaar with the Bulletin Board Heroes here at Xaar's Traders Cafe for Friday, the 28th of March. Starting off with the FTSE 100, which I think actually is quite impressive given the lay of the land. Lots of bearish talk and on the fundamental side, but the market staying within, or at least above that old February support line and that level there around 86.20. Above that, still looking for the market to try and get up to 87.50, and obviously there's still the hope that by the end of next month we could reach the top of that rising trend channel from the end of 2023 as high as 9,000. On the downside, whatever happens, which is obviously quite a big, a risky thing to say, not expecting this market to stay below the 8,500 level if we do break 86.20, even though it has to be said the RSI configuration with those two peaks in the low 50s is not great and would normally be taken as a leading indicator on the downside. Moving on to the DAX, so the hope was that the market would at least stay above the post-February support there and the 50-day line, which is so far done, 22,200. Not in great shape, but we need to get an end-of-day close or a weekly close back above 22,900 really to get back into that rising trend channel from back in November. RSI's predictably fallen below neutral 50, so probably bracing for at least a test of 22,200, but hopefully not worse than that over the near term. Moving on to the Dow, and here the market back at the 200-day line, back just above the 42,000 level, which is the floor of that gap. Rather ominously, we've had an RSI 50 failure, so if you are a bear, you'd be thinking of going short and looking for the market to head back down to the floor of that channel there from back in April last year, 41,300. But while we are above that rising 200-day line, there's still the chance of spiking towards the 50-day moving average, 43,400. Moving along to Bitcoin, where the recent range has been an interesting one. Mostly, well, it's actually a bit like the situation at the Dow. Here we've had this market head back towards the old support there in the 50-day line, just under 90,000. We've also been in a range really between the 50 and 200-day moving averages. The risk now with the failure at RSI 50 and the RSI at 46 that we have to head down to the floor of the channel there, 81,000, but a bit of a messy range between the floor of the channel there and previous support / the 50-day moving average. No such quibbles about gold at the moment. We were looking for this market to head up to 3,200 by the end of next month. It looks like it's not going to get there. Well, it could actually get there by the end of this month, but 3,200 by the end of next month, especially while we're above the floor of the channel there at 3,000. Ideally, now we spend a lot more time above the initial March peak there through 3060, but that might be asking a bit too much. Moving along to the stocks, and quite an amazing selection today in terms of the technicals and what's been predicted and what hasn't been predicted. But starting off with Amaroq, which had an update today, and here you can see that the shares in a rising trend channel there from basically this time last year. The floor of the channel now established towards the 93 pence level. And what's interesting today is that we've completed a W-shaped turnaround for the shares and gapped up. So ideally, while we're above the floor of the gap there, 97 pence will make some progress to the upside, hopefully towards £1.10, etc. If you're cautious, you'd be waiting for an end-of-day close above the 50-day line at 102, or looking to buy the floor of the gap there around 97 pence. Worst case, obviously, is that we have to test the floor of the channel again. It is slightly unsettling that, given that the company's got into production, it was better for the shares to travel to production rather than arrive, but presumably that state of affairs will be changed. Speaking of change, it's possible now that Angus Energy is going to have the big turnaround that perhaps its shareholders have been looking for. I just got the feeling that this particular rebound off the floor of that rising trend channel base could be the last one, and we head up to the top of the channel there, up to 0.42. In fact, you could argue that the channel's a little bit higher than that, up to 0.45. We'd be looking for that by the end of next month. If you're cautious, you'd be waiting for an end-of-day close through that resistance line there at 0.32. Moving along to one of the triumphs of the recent past, in terms of the technicals at least. We've had Capai hit our third target there at 0.19, which took a few days to do, and looking for a final target here, 0.35, presumably by the end of next month, or the way things are going, rather sooner than that. But a massive turnaround for the shares. Very impressive indeed, and the charting, I would say, equally impressive on that. Moving on to Capital Metals. Here we've hit our target there at 2.6 pence. Took a little bit of an effort, and looking for 3.5 pence old support there for the shares by the end of next month, while we're above the old December resistance at 2.25. Next up is Exchange Xaar, where there's just the feeling here that the shares are ready to turn around, bouncing off the 200-day moving average. A nice candle there today, sharply rising 50-day line there at 1.2, basically looking for the top of that rising trend channel from January at 2 pence by the end of next month, which is a punchy call, but we like punchy calls. Moving on to a requested stock where everyone and their mother has taken the credit for the ongoing recovery here. I think we were onto it really with the break of the range around 8 pence. I think that was an obvious turnaround point. Question now is how far we can stretch, given the ongoing rise in gold. Previously said that above 10 pence we're looking for 13, and that remains the situation. I suppose if I'm in a good mood over the weekend, I may look at it and see what the next level up is going to be for the shares. Probably will be along the lines of the line I'm drawing at the moment, so heading towards the 17 pence area, perhaps as soon as the end of next month. But ideally, obviously, we stay on the right side of the 10 to 11 pence zone. Moving on to another stock which has done the bulletin board heroes proud. Here it's Great Southern Copper, which was interesting from both a fundamental and a technical perspective. Here we had the initial rise there, unfilled gap to the upside through resistance, and we've followed it all the way up, above 4.5 pence, now looking for a fresh target as high as 6.5 pence by the end of next month. The company, I think, has already raised money, so nothing can stop it now, inverted commas. Moving on to another great success in terms of the prediction game, and it's been Metals One. The shares highlighted in the low 0.2s as a potential oversold bounce off a falling support line there from the end of October, and what a move that we've had so far. I'm trying to work out sort of 8x or something like that, but basically that's after the consolidation, 0.2 became 2 pence, etc. Looking for up to 20 pence now by the end of next month, while we're above the old target there around 14.5 pence. You can see also, if you look closely, that the 50 and 200-day moving averages are both rising, going into a golden cross, and that tends to be the strongest part of the cycle. But this really is moving now with these unfilled gaps to the upside. Surprise and I suppose a very welcome winner here has been Premier African. Was brave or mad enough to suggest that the shares were going to turn around with the bullish divergence there, and the break of that resistance line there from back in January around the 0.015 level. The best case scenario target was up to 0.026, but obviously that has been blown away, and we're looking now for, obviously fundraisers permitting, looking for a best case scenario target at 0.065, but I think it would be amazing if we managed to get up there without some kind of fundraise. The other point to note is we fill that gap down there from January, 0.035, and so ordinarily that would be the end of the rebound. And we do also have the 200-day line, quite a key technical feature there, 0.046, and we haven't been above the 200-day line since as long ago as August 2023. So this, so breaking that or hitting that would be a momentous occasion for the shares. Moving on to Strategic Minerals, which has taken about 100 years to break out of its range, and obviously happy for all those in the stock. It was sort of trading between 0.2 and 0.3 for a whole year. The initial target here was 0.41 if we could break out, and the next target actually 0.62, and although it looks a bit crazy, I think that could be achieved as soon as the end of next month, or even sooner. It looks like the shares finally turning around there, and I believe from memory that's a producing company as well. Finishing off with Xaar, and here shares already on their way with the Bear Trap Island reversal, so gapping down at the beginning of the month and then gapping up yesterday, and we've got a rising 50-day line as well, so the minimum here really towards that 200-day line. And if you're a fan of the shares and looking for what the best case scenario could be, it would be up to the upper parallel of that triangle, which is actually £1.30, and we could see that by the end of next month. The only proviso is that we need to stay above recent resistance around the 84 pence level. So a little bit of a difficult one there just in terms of holding the recent gain. That's it for me today. More updates over the weekend.